Hello, everyone, and welcome. If you are a tax preparer, accountant, bookkeeper, or someone interested in US taxation, this video is for you. Today, I'll explain one of the most important IRS updates for the tax year 25, which taxpayers will file during the tax year 26 filing season. Every year, the IRS announces several inflation adjustments. These include standard deduction, federal income tax brackets, and many other updates. In this video, I am focusing only on federal income tax brackets because many other tax concepts become much easier once we understand income tax brackets. Now let's focus on the federal income tax step. This is where your actual income is taxed and calculated by IRS. So once we have our taxable income, the IRS applies the federal income tax brackets based on your filing status, such as single, married, filing jointly, or head of household. So at this stage, the federal income tax represents your annual tax liability before any tax credits are applied. Now let's move on the federal income tax brackets. Before we look at the numbers, let's clear one common misunderstanding. Many taxpayers believe that if they move into a higher tax brackets, all of their income is taxed at the higher rate. That is completely incorrect. The United States follows a progressive taxation system. This means different portions of your income are taxed at different rates. Only the income that falls inside each bracket is taxed at the bracket's percentage. One important point to remember is that seven federal tax rates have not changed. They are as same as they were in tax year 2024. The answer is the income threshold. So if the tax rate stayed the same, what actually changed? Every year the IRS adjusts these thresholds to reflect inflation. Because wages generally increase over time in the US, the IRS also increases the income ranges, so taxpayers are not pushed into higher tax brackets simply because of inflation. This adjustment is often called preventing bracket creep. That's the real purpose behind these annual IRS updates. Now look at the some interesting IRS statistics because they tell us how taxpayers are filing their tax return. This tells us something very important. One trend that immediately stand out is the electronic filing. Most taxpayers now submit their returns electronically, and professional tax preparers continue to prepare a significant portion of tax files and submit it on their behalf of their clients. Over the years, this amount is gradually increasing. Now let's look at taxpayers who file as filing married, filing jointly, or single filer. If you compare tax year 2024 with tax year 2025, you will notice something interesting. Every income threshold has increased slightly over the last year. However, the tax percentage remains same, exactly the same. This means a taxpayer can now earn a little more before moving into the next tax bracket. For example, if someone receives a salary increase during 2025 because of inflation, they may still remain in the same tax bracket for longer portion of their income up to this amount for each brackets. Let's see how this works in practical example. We assume our annual taxable income is 100,000. So you will notice that the taxpayer does not pay 22% on the entire income. Instead, the income is divided into portion. The first portion is taxed at 10%. The next portion is taxed at 12%. Only the remaining balance out of 100,000 is taxed at 22%. This is exactly how the US progressive tax system works. Now let's perform the same calculation for tax year 2025. We assume our tax annual taxable income is 100,000 and 103,350 US dollars. Again, notice that the tax rates are exactly the same as per tax year 2024. The only difference is the each income threshold has increased because of the inflation. So the tax amount is, as a result, the taxpayer can earn a higher amount because before reaching the next bracket. This adjustment help reduce the tax burden that could otherwise arise purely because of inflation. Now let's compare the final tax calculation for both tax year 2024 and 2025. At first glance, someone might think the taxpayer is paying more tax in 2025 because the total amount of tax has increased. However, that's not the correct conclusion. The taxpayer is also earning a higher taxable income. The correct comparison is not only the tax amount, it is how much income is taxed before moving into the next bracket. The IRS has increased those thresholds, allowing taxpayers to keep more income in the lower tax brackets. Now, let's see how these adjustments apply to merit filing jointly and qualifying surviving spouse. For married couples filing jointly, we see the same pattern. The tax rates remain same. Especially important, this is especially important because many married couples have two sources of income. Why? Because the income threshold are increased over the every tax bracket. Higher tax threshold means they can earn more before moving into the next tax bracket. It is about making informed financial decision throughout the year. Why? Because higher threshold mean they can earn more before moving into the next tax bracket. This creates additional tax planning opportunities. Good tax planning is not only about reducing tax today. So this is where tax professionals add real value beyond simply preparing their tax returns for their clients. Now let's discuss taxpayer filing as head of household. This filing status is generally provide wider tax brackets over the other tax brackets than single filers and the married filing jointly, because it recognizes the additional responsibility of supporting a household. Again, we observe the same IRS approach. But remember one thing: a taxpayer cannot simply choose this filing status because it is lower in taxes. The IRS has specific eligible requirements, and tax professional must ensure those requirements are fulfilled satisfied before selecting this filing status head of household. So before we finish, let's summarize the most important points for today's discussion. The federal income tax rates have not changed. The IRS has increased the income threshold because of inflation. These adjustments help prevent taxpayers from moving into the higher tax brackets simply because wages have increased for against the adjustment of inflation. So professional tax preparation is much more than entering numbers into the software. I hope this comparison between tax year 2024 and 2025 has helped you understand not only what changed but also why these changes matter. I hope you found this explanation useful. Please like, comment, and share this post with your professional network. I regularly create practical content on US federal income tax, IRS updates, bookkeeping, and accounting topics designed for tax professional and finance practitioners. Thank you once again, and I look forward to connecting with professional and CPA firms around the world. Have a nice day.